Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. We've got a very truncated week this week with Christmas. Today is going to be probably the only trading day that's going to have some reasonable participation, because as we go into the half day tomorrow, obviously bank holiday on Wednesday, presume that Thursday, Friday are going to be very sort of phoned in, and all that attention will really get lumped into Monday and Tuesday of next week as we wrap up the year, and any kind of last minute performance chase window dressing, any kind of tax loss harvesting, those positions that traders want to close or open for 2024 will get really concentrated into Monday or Tuesday if they haven't already been put to work this year already. And that brings up the fact that, we have this 4-year cycle of the election. And that simply means that a lot of the attention and activity that would be focused on December, a lot of times will get placed in November. And we saw the way in which November moved in terms of a lot of the optimism, assumptions about the incoming administration, assumptions about the next year. So it's not just political and having an election year, it's also the monetary policy cycle. And that's probably what has hijacked the entire narrative, because up until probably hearing from Powell for the press conference on Wednesday, there was some optimism about the ongoing rate cut cycle, and that really got washed away. If you take a look, let's open this up here. If you take a look at we have trouble getting your pages. All right, let's see what's going on here. We really saw a lot of the optimism around the rate cuts get swept away by Powell's comments in that fairly long press conference, the one that seemingly never would end. And what really, at the end of the day, you might say, what did he say? I'm going to tell you this right now, gang. It doesn't matter what he said. It really only matters how it's perceived. And I say that not to, if you want to watch, and I don't know why this isn't populating, but what I'm looking at here, just for those of you that have been here for Charts and Coffee for years at this point, know that this is the CME, Chicago Mercantile Exchange Fed Watch tool. And there's a graph that pops up that will show you the expectations for the next meeting, which is in 37 days. Yet last week, what we saw was that expectation jumped to a hold at about 90%. What traders like myself, who are looking for that continuing easing monetary policy, what we were looking for is at least the cut, and there it goes, at least the cut and the hike to come within 50-50, a coin flip of each other. And instead, as Powell spoke, this column to the right, the column that represents a hold of the current rate of 425 to 450, just kept right on moving higher. Now, again, 37 days away, a lot could happen. We have a new year, and we'll have plenty of data between now and then. The one that I would keep an eye on, what would force Powell's hand, right? Because we're not talking about this week. We're not even talking about the end of the year. What are we talking about now on Monday, December 23? How are we going to prepare for the first week in January? And the sentiment going into January is going to be that the Federal Reserve has, at this point, no plan to cut on the, as you can see, 29th. 91.4% expectation of a hold. Now, as we cruise into the 29th, one of the things that we could think about is, what is the data between now and then that would suggest that Powell may have to cut? And because we talk about why Powell may have to not cut, or even, further, maybe not that far down the road, hike. And that's the inflation conversation. With the GDP showing a pretty solid number, although who looks at GDP? I'll tell you, nobody anymore, but the growth is there. So other factor for Powell to cut is, are you breaking the economy with your current monetary policy? So yes, inflation's part of it, but if jobs, because remember, the Federal Reserve has a dual mandate. So if jobs start to miss, if jobs start to slow, it'll put a little pressure on the Federal Reserve to continue to cut. So we're just kind of going back and forth. By the way, gang, how accurate has the analysis on target rate probabilities been? They're always adjusting, right? It's not that it's fixed, but it's been absolutely accurate all year long, right? If anything, in September, it wasn't dovish enough. So let's keep an eye on this data. Let's trade what we see, not what we think. This isn't about feelings and hopes and wishes. Just look at the data, right? And then making a decision based on that. I will say, as of today, it's the first time in many, many, many weeks, not by design, but also just organically, I'm flat as a pancake. I have no open swings, and that's not been the case in many months. So as we go into the end of the year, December 20 options expired. So those positions were closed. I had a couple positions that were stopped out. But for the most part, while not as good as November, December has been a solid month of swing activity and of winners. And we can close out December, unless we get some last minute short-term swings. We're probably going to close out December, one, in the black, and two, looking ahead to what we can do in January. I'm not bearish, gang, right? I'm not bearish. It's just that we're not as bullish in all the sectors and in all the stocks as we were before last Wednesday with Powell. The NASDAQ is still in an uptrend, gang. You can see here, take a peek. This was Wednesday's sell-off. This was lower lows on Thursday. This was lower lows into Friday. And then now we're trying to rebound a little bit. So please don't presume that the day of the sell-off that it's necessarily a blue light special. We still need a setup, especially after we have the kind of sell-off that we had on Wednesday that is outside the typical price movement range. It's outside the typical volatility. We actually went from the 68% probability of movement, which is what these red and green and gold and gray zones on my charts represent. We went right beyond the 32% rare air and then some. And that's a really good reason to pause. And I had good intentions of buying a dip on Wednesday until that dip turned into going off a cliff. And then because we can measure where dip and cliff meet and morph, right? We knew to wait and say, you know what? Let's see if we can't settle down. There'll be plenty of trading opportunity into next year. And why undo, what's been a good couple of months. November was excellent in large part due to the election and being bullish into the election. And December was pretty good, if not a little bit more volatile, because things that benefited in November, like financials and regional banks, definitely got hit pretty hard in December, and other sectors like technology and communications and consumer discretionary, mostly I'd say technology was the one that sort of woke up. So it's been an ugly chart the last few days. Gang, here's what I will say. Get really comfortable in living in a results-based economy, not a time-based economy. I see a lot of traders still behave as if they're punching the clock, right? There is no harm in being flat. There is no harm in saying, for me, there is nothing to do. There's no harm in saying, hey, I like what's happening, but I can't control risk with the kind of price action. So whatever the reasoning is behind saying, hey, there's nothing for me to do, get comfortable with it, because a lot of times you're going to find, gosh, it would have been better for me to wait. One of the things we talk about in the mastery is optimizing for waiting. In a world of trading where optimize is for speed, optimize for slowness, optimize for taking a breath, waiting a beat. It actually works out better when you look over the course of many, many, many trades. And then also optimize for, unless that position is so good, we can't get in, don't, right? Don't. And that's where a month like December especially is going to reward patience and reward process. And I would suspect it's going to be the same thing going into early next year. All right. There are some really great trends. Most of them are in tech. You can see here that Apple continues to be a wonderful. I mean, look how well Apple and even Microsoft, I'd say Apple, handled that sell-off on, when everything else was going to beyond the volatility range, going to a first or second standard deviation on the pullback. Apple held its own. So those are the kind of symbols that we want to go take a look at. What did not get absolutely destroyed? What stayed with green candles on Wednesday, on an FOMC Wednesday, and take a look at those that are still in uptrend. So that's a really good place to start the watch list. And that's a lot of what I'll do. I have the watch list this week here at Simpler Trading, and those of you that are members, that'll go out later today. And that's exactly what I'm going to scan for. And that's what we'll do in that video and in those notes. All right, let's see here. Questions. Evelina asks, do I prefer to swing trade 6E and QNG using a daily chart, or do I prefer options or ETFs? Evelina, in terms of 6E and QNG, so it's Euro for those of you that are not familiar, NASDAQ and natural gas. I don't mind to trade 6E, Euro futures. I trade NASDAQ futures, no problem. Natty gas, unless a trader is fairly adroit at the hot zones for natty gas, the inventory numbers, things like that, the seasonalities, it's a very volatile symbol. Natty gas would be one I would recommend. It's same goes with silver, by the way. Certain symbols just have a tendency to get suddenly and pretty brutally volatile. And I would say natty gas and silver would be two symbols that, while I encourage traders to get used to the way that they behave, I would definitely recommend that traders start off with options on those futures contracts or the ETF options. Yes, thanks for the question. All right, next up is GR asks, what would you recommend for traders with small accounts in terms of exiting profitable trades, closing the trade one contract only at predetermined target levels or trailing stops? GR, here's what I would tell you. I mean, and I don't mean to be self-promoting or toot my own horn. I would recommend you join me in the mastery, because it's not as simple as I have one contract. Let's go upstream to that problem, because it is a challenge, right? So upstream of that is, what type of pricing are you looking for in a small account, right? What is the allowable amount of dollars? If you've never thought about this before, what is the allowable amount of dollars that you can spend in your small account? Because small account could be very varied depending on who you ask. For some people, small account is a $500 account. I would never recommend in the history of ever anyone start with $500. So that to me is not even a small account. That's an account where you go, you know what? Keep saving your money. Yeah. So first we have to define what's small. Second, we have to define what the allowable amount of dollars we can spend per trade are. And that's going to be based on the allowable amount of risk to the account, which goes back to the account value. So I don't have I think before we get to what do you do with one contract, I mean, the answer is simple. Take the first target, grow the account to the point where you can trade two, or as I like to say, earn your size. But this is something I teach in the mastery. I mean, day in, day out, our emphasis is on the specificity. I mean, the exacting nature of, we have almost 1,000 members in the room, right? Not everyone's going to have the same budget. Not everyone's going to have the same desired account risk. And so therefore, for every single member, the budget, the amount of dollars we can buy options or whatever it may be, mostly options in a trade, predicate on all those little calculations. So it's really formulaic. It's not one size fits all. It's not a ball cap. It's definitely, what type of risk are you willing to assume to your account? What are you comfortable with? Are we trending or not trending? There's a lot of different things that we can consider. And then you end up with, this is the amount of dollars you can spend. And that's where, depending on what type of pricing, kind of going back to what I said, are we looking at $500 contracts? Are we looking at $1,000 contracts? Are we looking at $250 contracts? And that's going to be a big part of that. All right. As far as Tesla goes, Alan, are we in the zone for Tesla today? At the moment, I'll know at the bell, because that's when these daily price movement ranges will reprint. But I would say, I don't know at the moment, probably, but it's been really volatile these last 3 days. You can see where the gray and the gold have overlapped. So I would probably give Alan, I'd probably wait till at least 10:30 before I make a decision on whether or not I want to get long Tesla. I don't have any issue with that. We day traded TSLL the other day. I have no issue with that at all. What are my thoughts on PLTR? I mean, buy a dip. That's really it. Don't buy a rip, buy a dip. You could probably get away with buying a rip. I say get away with because it's not actually a great risk reward approach to something like PLTR, which doesn't give a rip about what Powell says, doesn't give a rip about end of year. It's on its own journey. However, some kind of dip would be great. The lower half or the lower third or even the lower quarter of the current range that it's in, between 80.5 and call it 68, would be a great way to also look at this. But I would look at buying as close to support as possible, not buying through resistance. I don't buy through resistance. Yeah, Eddie. So anything really below 74 to about 68, that would be a great 6-point range to buy calls as they sink into that range, presuming we could go back up and retest $80.50. So we've had plenty of those opportunities. It's just that folks are usually interested because 80% of traders are interested in buying things that are making higher highs. Don't be one, I'd say 90. Don't be one of those 90%, right? Ask yourself, is this an uptrend? Yes. Is it likely to continue? Also, yes, we play probabilities. Yes. So then we ask ourselves, what would be a reasonable place to buy this on some sort of sale? And that's where I say, find a range, cut it in half, buy the lower half, buy the lower quarter. And you're going to find that what it gives you is a choice. Because let's say you bought this thing, not at the bottom. Let's say you bought this thing at $71, right? You bought the calls at the money at $71. Today, you have a choice to scale out and pay yourself if you'd like, as opposed to a trader who maybe on the 9th bought a new high, or maybe on Friday bought a new high. Not many choices there other than, please, Palantir, give me a new breakout. That's a terrible place to be, right? I wouldn't want to be at the mercy of someone who feels that, hey, I want to get in at a new high. I'd rather get in that lower quarter, lower half, and at least be able to scale out and move to break even. And then as a second phase or as leg 2, look for that breakout and that continuation. All right. What's the smallest account needed to follow my trades? Joe, I don't recommend anything less than $5,000. I would not recommend anyone even start trading, frankly, with less than $5,000. There's a lot of stories about traders starting with small amounts of money and so forth. But, I would never recommend to a friend to start a business undercapitalized, right? Nor would I recommend to anyone starting trading undercapitalized. So I would say 5 is a great place. And it's still going to present certain limitations, but you'll have a whole lot more choice. And I want to be super clear. Anything under 2,500 is a hard no for me. Hard no. Could you start with 2,500? People ask me that all the time. Yeah, you probably could, depending on if it's a leveraged product, but you don't have a lot of margin for error. So what I say is 5 gives you a really decent chance at some reasonable trades, some decent size, without 1 or 2 trades putting you right out of business. And anything under that is just, frankly, a good place to say, I've got a grub stake started. Let's keep building it while I'm studying. So, if you're out there, don't be disheartened. If you've got $500, $1,500, $2,000, leave it alone. Keep adding to it. Keep studying. Keep watching Charts and Coffee. Keep consuming all the free material out there you can, and then continue to grow that account. Maybe you buy a course or 2, but again, continue to grow the account until you've got at least 5 and you've given yourself a fighting chance. All right. So again, I'm out of time. As always, if you have any questions, feel free to ask. Coming up into Q1, we're going to be doing something pretty special in the Sector Secrets Mastery. So for those of you that have been enjoying Charts and Coffee, awesome. I appreciate the time and the questions. We're going to be doing some Q1 Sector Secrets Mastery, really some unique ways to get people into the process and into that whole way that we look at trend following in the mastery. So heads up, now's not the time necessarily. I think a lot of you are looking at starting something new, but keep in the back of your mind that If you're looking to just kickstart your new year with a process that's been time tested, heads up, I'll be sharing with you all our results from the last 6 months. Easy, so if you say, Rog, how have you been doing the last 6 months? How did the last half of the year go? Most of you know how the first half of the year went. It went phenomenally well because Q1 was unbelievably strong. But ultimately, what you want to remember is that as we go into the new year, can you benefit from 90 days basically by my side in an immersion, right? Could you benefit from 90 days of sinking your teeth into a singular process and I'm going to show you the kind of results that we've got. Why were we not hammered on Wednesday? Why were we taking profits and closing out trades 2 days later? And those are the kind of things that I'll share with you all. So it's a 90-day immersion, something we've never done before. I'm super stoked because the timing could not be better. And we'll let you know a whole lot more about that by, I'd say, mid-January. Before you know it, but roughly 2 weeks. Okay, gang, as always, thank you so much. And I'll see you tomorrow. Same time, same station.